Well, it's been an ugly year, obviously, for the buy side. As far as today is concerned, sure, we're seeing a little bit of a bounce, which is nice. We are seeing some sellers in the wings, so I don't think they're going to explode them. Look, if they can stabilize them here, that would be nice. As far as how it's gone this year so far, Mike, I would say this. Normally, you see volume spread about 50-50 between hedge fund and mutual fund. Lately, it's been predominantly mutual fund, which indicates that this is somewhat seasonal in nature and that we're seeing people preparing for redemption, the funds preparing for redemptions. What does that mean? Well, that means that no one's going to jump in and take some risk here in the remaining time this year. But that does mean that January may see a change. The calendar might turn over. We might see some buy interest. You're getting to the spot where tangible book values start to get attractive. When you look at the way the prices have backed in, the dividends now start to become attractive, even relative to the Fed raising rates overall. So if you see something that was maybe at 5% before, now maybe it's 6-7%. So I think that you can look forward with a little bit of confidence that we're not going to see the same sort of activity that has sort of mired this market in the last month. And you do talk about the emotionality that we've seen here. Friday was very active, and I don't think I can remember a Christmas Eve trading day that was quite as exciting or as emotional as that one was on Monday.
I mean, it really did. I was here too. I agree with you, Gordon. It felt like the market was closing out, preparing for something really big and really bad to happen on the news wires. I mean, we sit here and we can list the problems out there. There's a shutdown, and a lot of people think the Fed made a mistake, and the whole world economy is slowing. But U.S. fundamental data appears good. So what is it? What's that thing that the markets feel like they're anticipating?
Yeah, well, sir, you make a very good point. It certainly was emotional, and it does appear to me that having this day off really was just what the doctor ordered. It was just something where everybody got this needed moment to take a breath and sort of digest what's out there. And this elevated selling pressure that we've seen, that guys just, wanting to take the risk off, just building upon itself. And it seems like that is calming down to me today. What will it be for the rest of the week? Hopefully it'll be stable. We'll start to hold these levels, and then we can regroup and get ready for next year. If we start to pick up some downside momentum like we had earlier, then you look at the technical side of this thing, and some of the markers become a little bit frightening.
We mentioned on Monday the two in a row intraday sell-offs we had on a nice intraday, on a nice rally, right, on Williams and then on Tepper on Monday. I mean, what would constitute success here? To close flat for a day or two? To close higher than you opened?
I think it's probably two things, Carl. I would say number one, it is to hold the market at these levels, but two, to get the emotionality out of it. Maybe to start to see some of that volume come down a little bit, just for the markets to be calmer. As Sarah pointed out before, the close on Monday was really quite an emotional time, where normally when you're just sort of going into a holiday, it's really quiet, and that was not the case.